Hi everyone. So we have seen the Nifty and Sensex crashing over the last 3 days. The Sensex crashed by 900 points almost, and the Nifty has crashed in the last 3 days by 350 points. I'm sure that there might be this question on all your minds as to what the hell has happened that the Nifty and the Sensex crashed so much. So without wasting any time, let's move on. First reason, global markets. Over the last 3 days or over the last week, we have seen the global markets crash in this manner. This is the weekly chart. Look at this candle. Okay. After having two bad months and a violent bounce, the DAX actually didn't have any violent bounce. The DAX just crashed. Okay. Then we have got the FTSE. FTSE also same. We are seeing a candle. This last big candle is this week's candle. This week is gonna get over tomorrow. Okay, so this is what's been happening since Monday. Okay, and also here we are seeing that Huawei, the Chinese company, the top management person from that company got arrested in Canada on an extradition request which was given by the US government. Okay, why? Because they were allegedly having dealings with Iran and not following US sanctions. So this has also created fears of trade war. This is the Dow Jones chart. You can see that it's trading at a horribly low level right now. There, this is the current week chart. We saw violent bounce last week, but this week most of it has been negated already. So yes, the global markets have been crashing. There's a turmoil in the global markets. There's also a talk of a expected slowdown in 2019, which is expected to happen in the global markets. Why? Well, there are several reasons. We might go into that later. Currently, Fed is on a rate hike cycle, and obviously that has created an inverse yield curve in the US. The news which came out a couple of days back, which also is a scary situation, that there is a short-term liquidity crunch that is taking place out there, which has inverted the yield curve. Now let's move on to the second reason, that is the RBI GDP forecast. So we saw the RBI monetary policy coming out yesterday. Here, and in that monetary policy, the RBI actually gave the quarterly GDP forecast, and in that forecast, they said that the GDP is in our they said that in our April policy, okay, we had said that the GDP would be for the whole year would be around 7.4%, and in um, our current expectation of GDP for FY19 is 7.2 to 7.4%. So it is in lines with that. Notwithstanding the fact that in the first quarter of FY19, the GDP had come to 8.1%, and in the second quarter, it was at 7.1%. We saw a drop in GDP. Now, the drop in GDP was due to several reasons, the primary one being the drop in CFPI, which was observed. Now, the CFPI is the food price index, okay? It is reported along with the CPI, which gets reported um, every month. Okay, and we are seeing that over the last 3 months, the CFPI has been dropping consistently. The rural CFPI is entered negative territory in September. The October CFPI number, which came out, made the rural and urban CFPI both drop into negative territory, and hence there is deflation going on in food prices. Now, if you imagine the entire GDP of India and the employment of India, a lot of people are employed by the agriculture sector. If this continues, there will be an agrarian distress that can be seen. Okay, in fact, the governor also said that we will actually have to consider having a look at the MSPs of several crops before the next policy comes out. So, The RBI is also aware of this concern, and this is definitely a concern that is not worth taking lightly. Also, they mentioned in this monetary policy that the GDP which came to 7.1% in the second quarter, okay, here this one, okay, uh, okay, in that they said that they have considered it has fallen because of low kharif output. Okay, it is mentioned somewhere here. There you go. Subdued growth in kharif output. So they have not considered Rabi output yet. So I will be speaking about Rabi output later on, but just the low Kharif output number has been considered. Other factors have not been considered. And according to my and the Money Roller, our estimates, the GDP numbers for the next half of this year are going to be anywhere around 6.5 levels, the GDP growth. And that might actually bring the GDP lower than RBI's expectations. So the CFPI so RBI GDP forecast was our second reason. The CFPI entering deflation is our third reason, because that will affect demand in general. Rural demand is going to be majorly affected if the CFPI continues in negative territory and the government does not do anything about the MSPs. Our fourth reason is the NBFC problem. So, in the monetary policy yesterday, the RBI stated that in their opinion, the NBFCs, obviously they have relaxed several rules for um, helping NBFCs deal with their problems. They have relaxed securitization rules. They have relaxed bank norms for lending to NBFCs, right? So they are helping out NBFCs in whatever ways possible. But they also made a statement which said that this might have to continue till March, which means that the NBFC problem may not get over anytime soon. And if they are saying March, you and I can well take it with a pinch of salt that maybe this problem might not get resolved until June. So the NBFC problem is a legit issue that has still not reached its resolution stage. Although it is good that they are trying to help out the NBFCs, but uncertainty is the biggest villain that can affect any investor in the market. Also, the NBFC problem which is going on has affected the credit growth in our industry, because NBFCs were the hero of the economy. They used to provide credit to those where the banks were not able to reach. Okay, and now that the NBFCs are in a problem, all the money that is flowing into the NBFC is going to repay their own interest commitments. It is not going to disburse new loans. So if you go and ask any NBFC employee out there, they are just sitting there and they are saying that we have been asked not to disburse any loan at least till January. So obviously, if you can think that for the economy to chug along at a quick rate, you require credit, and that credit is not being disbursed by NBFCs. So in yesterday's policy, RBI also mentioned that the bank's credit growth that has been affected by the banks has been to the tune of 15%. So banks are giving out loans, but the growth is only up to 15%. Okay, the banks are not able to reach everywhere in the economy. This will actually also affect our GDP numbers. And if at present GDP is at 7.1, if this continues, this will also lead to a further slide in our Indian GDP expectations. Not to mention that if the major problem lies in the housing sector, right? So all the credit which has been new credit is not being availed by the real estate sector, and this sector is in a mess. These news will soon come out. I mean, it's an obvious a blind man's guess that this sector is in a mess right now, because the NBFCs are in a soup because of the housing sector. And there has been a slowdown in the housing sectors. We've got builders who are reporting that this Diwali they have not done sales, adequate sales to supplement their growth, and it might lead to a domino effect that if sales don't pick up, the builders might default. Builders might default will cause additional stress on to the NBFCs, and the NBFC problem might continue for a longer time. So it's become a chicken and egg situation. Who will default first, or who should be bailed out first? So again, if you were to consider this with respect to the GDP, things are not looking very good on this front too. Also, now if you translate all of this into corporate earnings, we just completed one season of corporate earnings where the corporate earnings was disappointing. But now what are we discounting? We are discounting that even in the subsequent season, due to a slow festival season, slow consumer demand in festival season, the subsequent corporate earnings are also not likely to improve soon enough. There is a legit credit crunch in the economy. Okay, banks are also in a soup for their own capital, so they are also disbursing loans at a way slower pace than earlier than required. Also, so while we saw a rally right from the Modi government got elected, the NDA government got elected from 2014 to 2018. Overall, we have seen a substantial rise in the markets uh, in the hopes that the earnings might improve, but the earnings did not improve as well as expected. And now, still for a couple of quarters, I don't think that the earnings might improve yet. So, one would have expected that after the festival season, good earnings would come, but due to all these things that are happening around us, I don't think that the earnings will improve. So, disappointing corporate earnings, even for the next 2 quarters, is something that the market is discounting now. So, that's our seventh reason for why the markets fell. Moving on to the eighth reason. Okay, I've put this here deliberately. This sounds like a very general reason that there is corruption in India and GST refunds is a problem. And this problem is not a new problem. It's been there since GST has come in. Why have I put it here? Because this problem is a legit problem. When things are good, when liquidity is good, the pinch of this is not felt. But when liquidity is bad, when you are requiring money, right now December, advance tax is also something that is gonna come for companies to bear. At that time, when you have your government bureaucrats who are clearly demanding money for giving you your GST refunds, so this is something that you will not find documented anywhere. But if you talk to any businessman, they will tell you that the GST refunds, the government officials, the bureaucrats, they who are in charge of the GST, they are charging 10% as a cut for you to get your refund. So if you have an 80 lakh refund pending, 8 lakhs is what they'll charge you. Not only that, there are a few bureaucrats who go to the extent of making you deposit that money in check along with GST on that in some consultancy's account or something like that. And that is how this entire corruption has um, reformed after GST has come in. So again, this is just a general problem which is there, but right now this pinch will be felt the most as the credit is not freely moving and the consumer demand is also less. All right. The ninth problem is the weak rabi sowing and drought-like situation in few states. Okay, so this is something which might come as a shock to all of you. The RBI did say something about it the other day in the monetary policy that so there you go here on your screen. So we have seen that so far Rabi sowing has been 8.3% lower in November compared to the same period last year due to lower soil moisture levels and a deficient monsoon. So we've had a bad monsoon. People are acknowledging it. Kharif harvest was affected, which is why the GST came down in the first place. Now this is what can bring it down in the second place. So in the next quarter, right? Also, they are saying that storage in major reservoirs, okay, is at 61% of the full reservoir as on November 29. Now, I've got an article here which says that um, the total storage capacity of the reservoir, okay, the percentage was 67% for the week ending 8th November. Okay, the RBI said that it was 61% for the week which was ending uh, uh, current for the week ending 30th November, right? And here for the same period last year, okay, as of 15th November, it was 99%, okay, and the last 10 years storage average has been 97%, and we are in the 60s right now. So you can see that the rainfall reservoir levels due to the rainfall are at a much lower stage right now. They are in the 60s. They were 97 is the last 10-year average. So you can see that this is definitely gonna impact our RB somewhere. Okay, that is what a prudent person would conclude. We hope not. Fingers crossed that it does not impact, but it's very likely that the Rabi crop is not going to be uh, a bumper crop. And this fear, along with a few reports which are here, which came, this report came on 20th of November that Gujarat Rabi sowing is bad. This report came on 5th December, that is yesterday, that the Karnataka is staring at a huge Rabi crop loss. Also, we have another report, this report which says that even in Maharashtra, the Rabi sowing has been affected due to the rainfall. Uh, And it is also said here that in total the Rabi crops planted were 191.12 lakh hectare so far this season, which is down from 227.41 lakh hectare. So that's almost a 15% drop in the Rabi crops which have been planted. So Rabi is our uh, uh, ninth reason as to why the markets have crashed. All this is being discounted in the markets. This news has been dissipated slightly somewhere here and there, but uh, the full effect of all this will come in the next few months as this more and more data comes out. It will get clearer and clearer as to why the market fell. I'm just warning you in the start that these are the reasons what the market is discounting at present. Also, the last reason is election expectations and uncertainty. We have three states elections which are taking place right now. The results are expected later this month, and obviously, if the NDA wins, it is going to be as per market expectations. But if they do not win, it's going to upset the market royally. Okay, that's one thing. The same thing, we are having major elections in May next year, approximately in May next year. Again, the same problem is there that if NDA is coming, it will be as per the expectations. But if NDA does not come, or if there is no sufficient majority, or if there is any upset of any sort, it's going to create a chaos of uncertainty in the market. The uncertainty is not a friend of investors, especially it is not a friend of foreign investors. Foreign investors generally stay out when this kind of a situation is there. So until we see this foreign flow, I don't think that there will be any sufficient buying which is taking place, which might take place in the market. So guys, with this, I will end this video here. I hope that you liked it, and if you have any questions, comments, doubts, clarifications regarding any of this, we would love to answer it. And if you have any suggestions for further videos, also please mention it in the comments below. And yeah, so this is why the markets fell. We'll keep you updated. Bye.